NanoOne is a developer of high-performance lithium-ion battery cathode materials. We've got CEO Dan Blondal and CFO Carlo Valente joining us to discuss NanoOne and its growth plans and opportunities. I'm Martin Gago with Market Radius Research. It's Friday, May the 24th. Please remember, this is neither recommendation nor investment advice. We're here to learn about the company. Gentlemen, thank you very much for joining us.
Great to be here, Martin. Thank you.
Thanks for having us.
Dan, just to set the table here, so to speak, can you give us the quick 1-minute elevator pitch on what NanoOne is, what it does, and the opportunity you have in front of yourself here?
Yeah, sure, Martin. So NanoOne, we're a technology company focused on process technology to make lithium-ion battery cathode materials. And for everyone, just so to set the stage for everyone, the cathode material is the combination of the lithium and nickel, manganese and cobalt, or the iron and the phosphorus. There are many different materials that kind of go into it, but that's what makes a functional material store energy in a lithium-ion battery. The total market opportunity, let's say in 2035, is about $170 billion of cathode material being made outside of China. With roughly a third of that being LFP, the balance nickel-based, and also a smaller amount of manganese-based cathode materials. Our technology addresses all of that, and our first target is LFP, but we have much longer range goals on the nickel and manganese-based materials. Just to give everyone context, LFP is probably 99% of the world's LFP is dominated in China today. They're at about 60 to 70% LFP market share. And the rest of the world is just waking up to that right now. And this is really the big opportunity, is for us to lead that charge of LFP outside of China. We have multiple revenue streams that start with our existing pilot and manufacturing facility in Quebec, lead into larger commercial plants, and ultimately the big revenue streams come from licensing our technology to players around the world and operators who are looking to build out cathode facilities and infrastructure. The one-pot technology, which underpins everything we do here, helps us cut down complexity and CapEx and OpEx and energy and CO2 footprint. We completely eliminate all the wastewater and discharge that China currently has in their supply chains, and that enables us to domicile these supply chains in the West, and is really fundamental to wide-scale adoption in Europe and the US and Canada, and actually even in many Asian countries as well. And then lastly, the one-pot technology leverages battery materials that are refined in free trading jurisdictions like Canada and the US and other places. So that brings more secure and diversified supply chains to the world, which of course is becoming increasingly important as we see the geopolitical changes in supply chains. The technology, as I said, brings savings and advantages to LFP, nickel-based materials and manganese-based materials. And we have a design once, build many growth strategy that we announced recently with Worley, and I believe we're going to be discussing that in more detail here today. That really helps us de-risk, accelerate, and broaden the market opportunity I've just talked about. We've got lots of partnerships we can get into, and we have the only LFP plant currently outside of Asia, and the most experienced team outside of Asia, located here in Canada on the East Coast, just outside of Montreal. Look forward to talking about it in quite a bit more detail. I know that was more than a minute, but that's pretty much record time for me in terms of running people through the value proposition.
Well, that was very dense. You covered a lot of material in those few minutes, so that was excellent. I appreciate that, Dan. Carlo, welcome. This is the first time you've participated in one of these with us, and you're new to Nano. Could you introduce yourself, your experience, and I guess what I'd like to also dig into a little bit, you're an experienced CFO. You could have worked at a lot of various other clean tech or other technology companies. Why did you choose to work with Nano? And more specifically, what parts of your skill set matched up with the needs of what Nano is looking to do? And I'm just trying to use that to get a bit of a window into the direction of what's important for Nano right now and the evolution of its business.
Sure. Thanks, Martin. Yeah, we'll start by just giving a quick background. I started my career with one of the big four accounting firms, close to 15 years with PwC, Spread, almost evenly between Europe and Canada. The last 12 years of my career specifically have been as CFO of growth companies that have had a combination of institutional and retail shareholders, and we're predominantly in the mining and clean tech sectors. So having painted a bit of my background, what attracted me to NANO is first and foremost starts with the team. For any company to be successful, you have to have a good team. What I liked about NANO is the fact that there is a plant that demonstrated commercial viability. They've attracted reputable partners that have done extensive due diligence, validated not only the tech but the management team, and I believe they're confident that the products can be commercialized. Hence, they're the reason why they partnered, and some of them even invested in NANO. When it comes to tech, I always look at things that have large addressable markets and are highly scalable and can be as cookie cutter as can be, instead of being having to be bespoke on a customer by customer basis. And NANO definitely ticks that box. They've had tremendous government support. I think being in that EV energy storage space, there's still a lot of support there, a lot of market tailwinds. So in terms of being in the right sector at the right time, I think NANO is just in that sweet spot. And yeah, so I've just been in the growth cycle of companies for the last dozen years. I think that's where I'm the most comfortable with, and where I can provide a lot of experience. I've negotiated quite a few commercial agreements, offtake agreements, project finance agreements, raised hundreds of millions of dollars of capital, been involved in over 200 M&A transactions. So given where NANO is right now, I think I can bring a lot of that experience and background.
All right. Dan, NANO's not a company that puts out a news release every week or two. You put out substantial news releases. Over the last 12 or 24 months, is it possible just to, what do you think are the most important news releases that have really impacted NANO and shown its development and growth as a company?
Well, I think partnerships are probably one of the key ones. And we brought on a lot of partners in the last 24 months. So just almost 2 years ago, I would say just under 2 years ago, we were dotting the I's and crossing the T's on 3 agreements. One with Rio Tinto, who came in with a $10 million US investment, and a strategic alliance to build out iron metal powder as a supply for LFP, and I'll get into that in a bit more detail. But it was fundamentally very important. Obviously, it brought a lot of credibility to the company, and it also brought a very credible supply chain and an opportunity for us to really disrupt how LFP is made in the supply chains that are used in Asia. So that really brought NANO One and Rio Tinto together to build what we believe is the cleanest, greenest, and actually the most IRA-compatible battery metal supply chain on the planet today. Simply because we can work from iron, high-grade iron ore that comes from Canada directly through, that's processed with hydroelectric power in a metallurgical process that has no waste stream, and that's really unheard of with any other battery metals. So that's one of the things that really brought us together. At the same time, we actually announced the pending acquisition of Johnson Matthey Battery Materials, which was a $10 million Canadian acquisition. So those proceeds offset those costs very nicely and in a really good timing fashion. That, of course, that plant gave us not only access to an existing facility, but one that was highly compatible with our one-pot process. Had all the reactors, spray dryers, furnaces, and everything we needed in place. All we need to do is walk in there and dismantle all the waste handling and wastewater systems that we don't need. And that's all done and dusted, and we're now back up operating that plant at about 200-ton capacity, with ambitions to drive it up to nameplate closer to 1,000 or 2,000 tons. And then simultaneous to that, again, all this happened really at the same time. We brought on BASF and Umicore as joint development partners, and that would be to make their nickel-based cathode materials using our one-pot technology to cut down on cost and complexity and waste streams. So that was really the purpose of those arrangements. And we have then led to much, that's led to a lot of development work with them, and actually some really good success in the lab and at the piloting level. And then the other really big partnership announcement was about 6 months ago with Sumitomo Metal Mining, one of the most fully integrated miners in the cathode space. They make nickel-based cathode materials for Panasonic, some of that going to Japanese automotive companies, some of that going to Tesla. So very, very reputable partner. They came online to work with us on lithium iron phosphate, and really looking to be a licensee of our technology, a licensor of our technology, and ultimately also a partner in developing, co-developing, and looking at different market opportunities, not only in Japan, where they're based, but also in other jurisdictions around the world, potentially as an operating partner or an investor in plant expansion. So incredibly important. They also took a 5% equity stake in the company for about, to the tune of about 17 million Canadian dollars in September. So all very big validating steps for us. And then on top of that, the other news has really been about progress at the Candiac plant, closing that deal, getting in the door, piloting, building the smaller portion of the pilot in that plant, but also at the same time leveraging the existing full-scale equipment to de-risk the technology and start sampling materials out at not only at the 100-kilogram scale, but even towards the ton level scale. That's with our automotive partners. And so, all of these pieces all come together fundamentally to build a really strong case for us. Not only we have operating partners, we have supply chain partners, we've got OEM partners, and then lastly, we signed the Worley deal just a month ago. And that really brings a deployment partner to the table, someone who can really help us accelerate the commercialization of our technology and help us design, build, and propagate our technology in the form of licensing plants out, not only in Canada and North America, but in many jurisdictions around the world. So really, they've got obviously a very big bench strength. And as a multinational company with 50,000 employees, they have a tremendous sales force and tremendous reach into markets that simply we hadn't even begun to tap yet. So very excited about that relationship. Just kicked it off, but have been talking to them for several years now. So we're very much anticipating sort of very rapid growth and very much interest from not only their customer base, but ours, some of which overlaps. A lot to talk about, but as you said, we've had a lot of fundamental news over the years as well.
Since you finished on the Worley, I'd like to dig into that a little bit more. It took me a few reads and some conversations with you guys to better understand, I guess, the magnitude of it. Back in January, you announced an engineering agreement with BBA, and now it's with Worley. And can you, I guess, just to clarify, who's doing what in there? Is Worley doing the engineering, or are they just your licensing partner? How does each one do what with for NANO?
Yeah, well, I think, look, a lot of your listeners kind of come from the mining space, and they'll understand this sort of some of the language. We completed a pre-feasibility study last year in Q3, and that led us to then into a feasibility study, which we call a FEL3, or front-end loaded level 3 engineering study, and that takes the plant design to a level where you know the site, and you're figuring out all the basically all the localization of the plant. So how you plummet into the local ecosystem, be that power, hydro, and it's got all the basically the permitting that's needed on the particular land base you have. So you need a site, you need the engineering plans, and that's what BBA signed on to do, and that's what they are continuing to do. In parallel to that, we have some of the Worley team actually on the management side helping us with the design of that. But that's not really, that's kind of separate from the deal we just cut with Worley. With Worley, what we're talking about here is now taking that FEL3 when it's complete and then wrapping that into what we would call an FEL4, detailed design. And that's what ends up in the design package. BBA is still very much involved through to the end of that. And if that facility gets to a financial decision, then we would proceed with building that plant, let's say in Canada. And Worley may be involved in some of the detailed design work of that, but ultimately the big prize for Worley and Nano One is taking all that work we've done up front there, putting it into a much larger sort of detailed design package, wrapping in all of the key pieces of equipment, the flow sheets, of course, the one-pot process, the intellectual property rights, and that all gets bundled into a wrapper, which can then be cookie cuttered around the world in any number of fashions. It's kind of a modular design, and the concept here is that Nano One's technology, because I think primarily because we get rid of all the wastewater handling and all of the sulfate waste handling, we have none of that. The technology is much easier to modularize because you don't have to do a whole bunch of custom bespoke engineering every time you put it on a piece of land. You got to do a little bit just to localize it to the local standards, but you don't really have to deal with all these externalities that a typical process would be. So Worley came to Nano One looking exactly for this kind of technology that can be modularized and plopped down around the world in jurisdictions all over the place. And they simply have the bench strength and the wherewithal to be able to do that. They can build plants in parallel. They can build one-line plants or 10-line plants. All of that is really key. Now, they're not necessarily going to be building it. It'll be whoever's a local engineering company. It could be Worley, could be whoever kind of bids on the tender. The key thing with Nano One and Worley is this is a licensed package. We do all this engineering up front. You don't have to do any custom engineering. It enables us to drive the cost down of a plant. And by driving that cost down on the plant, we're able to extract a license from that. We're basically monetizing the savings we bring the customer. And now whether Worley then wins the package to build that or someone else does, that'll depend on the jurisdiction and wherever the thing's being built. Hopefully that makes a little more sense.
Okay, that does. It's a lot of detail. When I look at, let's say, given a lot of the audience are mining people with my expertise in the mining industry, when they're building a refinery processing system at a mine site, they have to really tune it to the feedstock that is there and design it for that. Is your system dynamic enough, I guess, that you can basically have the same system, like you're saying the one design gets replicated through the place, where you don't need to do major design changes. You can just turn some knobs and dials to accommodate whatever feedstock or whatever output that the client wants, specific characteristics?
Yeah, I mean, look, that's more or less it. I mean, the feedstock coming in, it's going to be purified, iron powder products, phosphoric acid, lithium carbonate, all kind of at battery grade, and you'll basically offtake those from any number of jurisdictions in the world, but they're largely standardized at that point, and we don't have to customize the process for that. So the spec on the input materials is fairly, I would say it's rigid, but we have some flexibility. We can go from metallic iron metal powders or oxides. In the case of nickel, we can go from nickel, metallic nickel powder or manganese powder or oxides or hydroxides or carbonates. So there's a variety of different feedstocks that may influence, how you do the reactions up front in the reactors, but there's enough flexibility in the system that you can customize a little bit of that but it would basically be all part of the package. It's there'd be maybe some a la carte stuff that comes with it, but by and large you can do this do this without having to do custom engineering that's specific to a site or a location.
All right. Also, going back to the Worley deal, when we first met and you first gave me a tour, I don't know, 7, 8 years ago at your first facility out in Burnaby, at that time you didn't know what your business model was, your revenue model. Would you build your own facilities or license? That obviously is getting more clarified now. And that this Worley deal, I guess just to emphasize it, that this is showing additional revenue streams and possibilities for you where you're partnering on the implementation of it as well. Can you sort of clarify all those revenue opportunities additionally?
Well, maybe I'll pass the puck to Carlo on this one.
Sure. I think, Martin, you have to look at it. There's 3 different revenue streams now. We have an existing plant that, as Dan mentioned, is currently at about 200 tons. We'd be looking to expand that somewhere between 1,000 to 2,000 tons. So that will be its own standalone revenue generator plus demonstration plant that we would bring future partners, licensees to, and show the process and the end product. The BBA project, what's referred to as the 25,000 ton per annum LFP plant, and in our public disclosures, consider that there's the analogy to a mining project. Consider that like a mining project, right? That's going on right now. That's just the first plant. Permitting's being worked on, the site selection, all of the project financing, government support, and there'll be eventual off takes. That's its own, that will be its own operating entity with a capital stack that'll evolve between now and when we get to the financial close on that. So consider that a standalone producing mine, if you want to stick with the mining analogy. The high volume global expansion will likely come through the Worley alliance, right? That's where we as a technology company joining with the global engineering and scale up expert. That's where we will be selling the heart of the plant in a package, which is certain pieces of equipment, some of which will be proprietary, as well as the engineering, the flow sheets, and our one pot technology. So the fee will not just be, the revenues there will not just be licensing. There'll be a bigger pie to share between us and Worley because there will be procurement of equipment and engineering, and that's going to be the revenue stream where we expect high volumes from and for it to be global.
The next milestones for your development with Worley, that is how the next sort of the implementation of your process will be put into place. What kind of rough timeline can investors expect for this? Is this like a 6 or a 9 month? Is this a 12, 24 month process where you'll have the design and be able to, let's say, shop it around and find customers for it?
Carl, do you want to continue with that? It kind of dovetails into what
Sure.
you were talking about. Yeah.
Yeah, I think it'll be fluid, Martin. Like I don't think we're going to wait for a certain date and where we're at with the product to go to market. Those discussions have already occurred. As Dan mentioned, we have relationships. Worley has relationships. Some of those are overlapping. Just by way of that news release a few weeks ago, there was some inbound on it to both parties from some of those relationships, those potential partners. So I think it's going to be fluid, and then we're going to initiate discussions early, quite soon, and then when we have a product that's ready to show them, we will. But I think it's going to be a fluid and iterative process as opposed to saying by said date we're going to deliver our first CAM package to to go to market, and we expect the license deal to follow shortly thereafter. I'd say the wheels are already in motion,
Yeah.
and it's going to be a fluid process with counterparties.
Could you give any, like, I would presume you won't be able to announce anything like that in June. That would be just too soon. But could there be announcement out of that deal coming by the end of the calendar year, or is that more of a maybe a 2025 event? Can you just give some broad indications to that?
Yeah,
Maybe
oh, go ahead, Dan.
Yeah, maybe I'll just chime in. Look, I think we break as Carlos said, we're breaking this really into three different revenue opportunities. There's the Candiac, there's the 25,000-ton plant, the mine, as Carlo put it, and the grander sort of licensing opportunity. They all feed into each other. But everything that happens in Candiac in this existing plant is really key to this. That's where the offtakes come from. That's where the first revenues will be generated. So that's the kind of where the short-term first revenues will come from. We already have small capacity there. We're in a validation stage with a number of OEMs, but also with a number of really small players as well. And I think that's where we'll start to see the first revenues come in. And those validation points, those first revenues will drive decisions on the large 25,000-ton facility, and they will drive decisions on the much larger and longer term CAM package licensing revenues. So I think we have to think about it kind of in three ways, and they're all interlinked. They're all going to be incredibly kind of important but they can happen in parallel, which is kind of nice. The one thing that doesn't happen in parallel is really the offtake and validation. That just has to happen. That's the thing that drives all of this. Once we start to see validation, all the other pieces start to fall into place actually relatively quickly. That's why it's kind of hard to guide anyone on the timeline on it. But at the same time, we're quite far advanced. We have the only LFP facility outside of Asia. That gives us a tremendous advantage because we can actually, and not only can we qualify the materials, with our existing assets, but we can do it in full-scale equipment. No one else has that luxury. And so we can de-risk the scale-up of this very easily. Everything else is plumbing, and as I like to say, it's pretty much just you just have to plumb the major pieces of equipment, put the materials handling in place, relatively low-risk engineering endeavors. And most sophisticated investors and partners can know that and can see that. Having Worley at the table really reinforcing that is going to be very important. So we all the pieces are in place for this thing to accelerate very quickly. Obviously, what we do in Candiac is going to be fundamental to catalyzing all of that. Hopefully that it doesn't bring any clarity to the timelines, but gives you a sense of where our focus needs to be and how that will feed into the really the platform that we set up for this thing to really accelerate.
All right. As you scale up Candiac or other facilities, you've got a very healthy balance sheet here. Do you and everything is there are a lot of moving parts here, so it's hard to know exactly the precise route you'll be taking. But do you have sufficient financial resources to be able to get the business plan forward as needed?
If there was ever a CFO question, that was it.
Yeah. I'd say we definitely have funds to progress many of these initiatives. If we're talking about completing FID on the big plant and completing expansion of Candiac to a 1,000 to 2,000 ton facility. I think as we disclose in our latest MD&A financials, probably need more capital for that. We're working closely with different provincial, federal, even U.S. government agencies on many new programs that we've applied for, that we qualify for. So now we're just waiting to see the level and timing of support, and I think that'll help drive some of the pace, Martin, on how quickly we we pull the trigger on certain things and expand. And at the same time, we do have some discretionary items in our objectives and forecasts. So we'll we'll see how the government support plays out in terms of amounts and timing, and then we'll make some decisions accordingly.
Okay. I've got a ton of questions myself I'd love to ask, but we have a lot of audience questions here that I want to get to. So let's, I'm going to start throwing some of these out. In a recent interview, COO Alex Holmes spoke about customer validation cycle. He said the validation process for auto OEMs is 2 to 4 years. Has this validation cycle started with any auto OEMs? And if so, roughly how long the process are you?
Well, I can jump into there. So as we have disclosed in other news releases as well, I'm sure many of our shareholders are aware of that. We do have some fairly deep partnerships and with OEMs, and we have been working on not only technology development but also validation of our materials. So the short answer to that question is yes, the validation cycles have begun, and the way the automotives typically work is they'll validate, you'll get to spec, you hit the right spec they have. They may end up moving that spec over time as well. But as you do that, you go into A sampling and B sampling and C sampling, and eventually into a vehicle. So it takes, car companies are planning their vehicle 5 years ahead of time. So you've got to be in the door 5 years ahead of time. And we are in the door and have been for some time. So that's well underway, I would say. As you go into A sampling, B sampling, C sampling, there will be spot demand for materials. So we will see revenue generated from that, but it'll be it'll be spot-like in the sense that there'll be lumpy demand for maybe tens or hundreds of tons of material to go into a test cycle, and that's all part of building that momentum. Now, the key thing about an automotive company, when they hit go on an automotive plant, they're going to need not just 10,000 tons. They're going to need many tens of thousands of tons to feed the cell manufacturing that feeds their automotive plant. So you have to be able to build up to that. We can't just suddenly put 50,000 tons of production into place. It starts in our existing plant at a couple thousand, at 1,000 or 2,000 tons. Our ambition is to get there. That enables us to do all that sampling, generate some spot revenue from the automotive companies. But the rest of that volume is going to be picked up by much smaller players. They're going to be in the defense industry. They're going to be in the battery energy storage industry for let's say storing energy from renewable energy, solar, wind, etc. And those revenue streams, those smaller offtakes, are going to be really important to filling out the volume in the first kind of 1,000 tons, and also the first 15,000 tons, and the first 25,000 tons. They will play a fundamental role in that. Ultimately, that brings your production volumes up to a point where you can then start feeding much larger automotive volumes. So I think it's important for shareholders to understand you need a blend of all of this to make this work. Obviously, you don't want all your eggs in one basket, and at the same time, you want to be able to have a variety of different off-takers at different volumes to be able to basically hedge the lumpiness in the market as it starts to tip up. Once we start to get over 25 or 50,000 tons, I think it all really starts to feed itself and it levelizes. But in the initial component here, it's really important to have all of that in place. So we are validating really with players anywhere from very small defense contractors through to ESS, through to the electric vehicle market, and not just in North America, but in jurisdictions in Asia and Europe as well.
Okay. Can North America and Europe compete with China on LFP battery costs? And for you, what type of tariff, or would tariffs be necessary to be put in place to be competitive with Chinese product?
It's a great question. So China dominates the LFP space and the NMC space for that matter. I mean, they control most of the world's nickel sulfate, manganese sulfate, a precursor. That's the combination of the nickel, manganese, and cobalt. They control all of the world's iron sulfate. It's actually tailing or a waste stream from TiO2 or titanium oxide mining and refining. And the challenge is the challenge with those methodologies, those processes, it gives China a tremendous advantage because they control all of that market. Very hard to copy China, let's say, to bring their cathode manufacturing and put it anywhere else in the world, simply because they've got a 10-year head start. And from a cost point of view, it's very hard to compete with China on that. But also, it's very hard to take those methods and bring them into a North American context because they have actually big wastewater and chemical waste streams, which China tolerates because their environmental standards are lower. And we aspire to be much better stewards of the environment, obviously in the West, and actually many other parts of Asia as well. So it's incredibly important that you actually have to solve those problems really before you build that up. And that is really what Nano One's mandate is. I mean, we are trying to solve the big problems that will enable us to scale that. That brings me to your question, is that not only do we need to be competitive on a cost front, and we believe we can from an LFP point of view, because we combine that precursor process and the lithiation CAM process into one. So we have fewer pieces of equipment. We don't have the margin stack because we're not two entirely different businesses. And we cut down the amount of equipment. We improve the yield and all of that. So in the distant future, we could easily compete, we think, with China, simply because we've got a much lower a lower cost base from an equipment and manufacturing OpEx and energy point of view. And that's when you look at it from jurisdiction to jurisdiction. So that's really about competing in North America on North America terms, using either the Chinese technology or the Nano One technology. The same applies to Korea or Morocco or wherever you might be siting these facilities. It's important to be able to look at it from a jurisdictional point of view. Within that jurisdiction, can you compete with China? And look, every one of these jurisdictions wants this business. They will put the incentives in place to bring that business in there, and they realize they have to be competitive. They have to provide the incentives for the volumes to go up to then be competitive with China. Do you need the tariffs in place? Not necessarily. Do you need the incentives? Yes, I think it's important. China has grown their markets based on incentives. They've incentivized local producers to get where they are, and we're seeing the same thing, whether that be in Korea, Canada, the US, in Europe. So incentives are really, really key. I think tariffs and duties are kind of icing on the cake. I think you have to be able to compete in the long run, steady state. You got to be able to have a cost competitive and environmentally competitive solution for the market, and that has to be independent of tariffs and duties. But meanwhile, they are icing on the cake, and we'll take that. But what's really key to that is the government incentives, because that's what helps nurture the supply chain to get up to the volumes that can then be competitive, because it is a volumes game at the end of the day. But we're starting behind the 8 ball. China, Korea, Japan are way ahead of us, and in order to get there, you need government support and incentives to really encourage growth. Once it's going, I think that's when the incentives can start to back off, and the businesses will be able to compete on their own. That's kind of the way I look at it, and I believe that we have that capability, and we certainly have the support here in Canada, and we're starting to see that kind of support, even cross-border support from the US as well. Carlo, I don't know if you add to that at all. I kind of took a long time to answer that question, but
Yeah, no, I think the key points: lower OpEx, lower CapEx. You couldn't even permit one of those plants in the Western world or other parts of Asia as well, or the Indo-Pacific.
Okay. Yeah, and look, an investment and traction is a big thing right now. So every country is dealing with this. They're going to put the incentives in place to grow that business. They want the whole supply chain to do that. They've got to incentivize companies to come there rather than incentivizing people to buy from the existing supply chains. And so that's really important. But I think those are temporary measures, and and that's just until the volumes get up to scale and can be competitive.
Okay. Are you still shooting for an offtake agreement in the first half of 2024?
Well, given yes, we are shooting for that, and in the second half, and into 2025, and into 2026. You don't stop with one sales agreement. So yeah, look, we're working hard at it. Obviously, we're almost through the first half of 2024, and we haven't announced anything. But yeah, look, we're constantly working on that. I can't guide anyone on it, but yeah, we've got a massive business development effort underway. We've got a lot of really good partners. As I said, we've got this facility where we're able to de-risk at full scale and be able to provide materials that are manufactured of full scale equipment. All of that plays into what we're doing, and we're at various levels of validation with a number of different parties. It takes time to put all this stuff in place, but yeah, well underway.
All right. Within the LFP world, it's almost all in China right now. You can't be the only person working on the LFP, the cathode solutions for the cathode market. Can you talk about the competitive landscape outside of China?
Yeah. So this is an interesting thing. The Koreans are the other really big sort of national sort of cathode producer right now, but they largely rely on China, and they're mostly nickel based. They have been traditionally. Up till a year and a half ago, they were staunchly nickel based, and they get all their NMC precursor from China, the majority of the lithium hydroxide from China. But when the IRA kicked in a year and a half ago, what we started, for Korea, it was very existential because their supply chains came from China and they were hooked on it. They really had to really kind of rethink it. They couldn't, as Carlo said, they couldn't bring that technology, they couldn't export that technology and then import it into Korea because it comes with all the environmental issues. So you've got a whole bunch of permitting challenges. So I think what we've seen from the Koreans, and we're going to see from the rest of the world, is that LFP needs to be rethought. You can't just cathode materials needs to be rethought. LFP is the easiest cathode material to start producing in other parts of the world because it's not as complicated to decouple from the nickel, magnesium, cobalt domination that China has. So now, having said all that, who are the competitors? So look, the Koreans are trying to get there. They're kind of weighing: do we just try and copy China, or do we try and invest in innovation? We're seeing a number of North American efforts underway and European efforts. Most of them are either licensing some existing outdated technology that we're kind of well aware of, very very similar to what we had what we replaced at Candiac. That's very difficult to scale, or they're simply trying to copy China. The problem with copying China is you're going to rely on their iron sulfate supply chain. So you won't ever break. If you copy China, you won't be able to break away from the iron sulfate and iron phosphate that China largely controls, because they really have the only feedstock in the world for that. So you have to kind of innovate away from that. And so we're one of the few players that are innovating away from that by going to iron metal powders. We're not the only one. There's some very small players in Asia and in Europe, and but most of the other players are really ostensibly copying either what we replaced at Candiac, or copying what happened in China and how it works in China. And by and large, those are very hard to scale in a North American or Western context.
You've accomplished a lot when you first started out here. You've got amazing partners, and you've got a lot of validation. What should investors view as the biggest risks going forward? Is it technology risk or just general scaling or business scaling? Can you execute on offtake agreements? There are a lot of aspects that have been de-risked, but what are the biggest, I don't know, what keeps you awake at night? That sort of a thing.
Carlo, do you want to jump in here, and then I can pile on?
Sure. For me, risk is normally, as a finance person, is the timelines to to cash flow, and that's going to be tied to broad market acceptance, and a bit of the shift in supply chains and some of the thinking, and continuous availability of capital. So those would be my my risk areas as a CFO.
Yeah, maybe I'll add to that. One of the things that is it's one of the things is how the narrative is shifting right now, I think, in the marketplace. Obviously, we're seeing a little bit of a pulling back on the very large, ambitious EV narrative, and that's largely because governments and big auto cos made big promises for 2025, and the reality is setting in, and they're not hitting them. But it doesn't mean the demand is going away. There's still far more demand than there is supply in terms of the supply chain in North America. So we still see a very, very healthy, robust pipeline of demand coming forward, despite the narrative in the the headlines obviously in social media and the paper. We still see on the ground very, very good dynamics. But the risks are how quickly can we actually shift away and decouple from the dominance of China? How quickly can we convince the automotive companies and governments to support innovative processes that actually decouple and diversify those supply chains? Because that's really, in our mind, fundamental to the growth strategy. I think the West has largely bet on high nickel materials, and there is some flawed logic in that, given that China is at 60 to 70% LFP. So how quickly can the West shift from NMC to LFP mentality? We're already seeing most of the major automotives starting to make announcements about shifting some of their platforms to LFP. So that's going to be fundamental. So the timing on that is really key, and that kind of speaks to what I think what Carlo was speaking to: timing and cash flow. When does that all start to roll, and when do all the right pieces come into play? So those are some of the larger shifts in the market that to some degree are out of our control. We're trying to influence them, of course, but to some degree are out of our control. The stuff that is in our control, which I think investors and shareholders need to keep their eye on, is really our progress and towards first sales and revenues. Because first sales and revenues really mean that there is market acceptance for the quality of our materials. Once there is market acceptance for that, we believe that is the tipping point that will drive growth. Be that from us or actually even some of our competitors. Once we start to see LFP being sold in the marketplace, I think then we'll start to see much larger growth in terms of cell production and automotive commitment to putting those cells in their vehicles. And that those are the signals to watch out for. Specifically from Nano One, it's about offtake and sales and revenues. Obviously, that's going to make the company not only healthier, but it's going to be a really strong signal that there's market acceptance for not only for our product, but for the underlying process for making that product that we plan to license out to the larger global community.
All right. You mentioned earlier that incentives are important for the establishment of the sort of local supply chain, and there also seemed there's a lot of elections happening, very important elections happening this year and next year in North America. And with let's call it a bit of a backlash against ESG in certain communities. Do you think is there a lot of political risk attached to Nano One on who wins this election, or that, given the importance of incentives or other tariffs or things like that?
Well, look, I think there's certainly uncertainty, and that I would be I'd be remiss not to point that out. There's a lot of uncertainty, but I think that for Nano One, most of it is fairly neutral for us because we see enough demand and there's enough commitment already from the automotive companies to go to LFP, which is our first chosen kind of go-to market. that's coming no matter what, no matter who gets into power and where it goes. We're going to see, and if things slow down further in North America, look, the automotive market is gangbusters in Europe. Mainland Europe is still very, very committed to ESG. All the automotive manufacturers there are still very committed, and so we see a lot of growth potential there as well. And look, it's going to be lumpy over the years. There's no doubt about it. This is a massive shift away from hydrocarbons to an electrified world, and you're going to see shifts in the market, and it's going to play out differently in different parts of the world. I think what's really important for shareholders to realize is that we have a global strategy. Our licensing strategy means that we're not like a mine where we're going to be fixed geographically. We can put a plant anywhere there is demand for it in the world, and that demand may shift jurisdictionally with different elections, different election cycles, and different narratives. But we are able to address a very wide sector of the world and be able to shift our focus to different jurisdictions, particularly now with Worley in the fold as an active partner, and with this kind of design once, build many type of philosophy. So yeah, maybe we turn our attention to mainland Europe or Asia or India in a stronger way than we do North America if North America kind of slows down. But we think we're pretty weatherproof as we go through these different patterns around the world. But the demand is healthy, and certainly the ESG drive is healthier in other regions of the world than they may be than the winds are blowing right now in North America. But we still think there's way more demand here than there is supply. No matter how the patterns shift.
All right. We're coming up to an hour here, so we should wrap things up. But I'm a shareholder, and there are a lot of shareholders on this call, presumably, and everyone, and I know yourselves are frustrated with the state of the capital markets and the share price, and maybe there should be an AI angle on Nano One. Just joking. But any commentary on the share price and the capital markets and what can or can't be done with that?
Look, the capital markets are where they are. We're actually healthier than I think most of our peers. Everyone's taken a hit over the last 3 years. We've weathered the storm better than most. And I think, look, we just need to keep executing on our business plan. Need to bring in partners, pushing everything forward. Look, the fundamentals are all there. The markets may not be, but they shift. And they move, and it goes in cycles, and we're well positioned for an upcycle. That's for sure. We think it'll go well. Carl, you want to pile onto that?
Yeah, I agree. For me, it's all about execution, and eventually the reward will be there. We can't be fixated on short-term upswings, downswings in the market. We have business plan. I think we have great partners. We have great product. We've hedged ourselves to some respect, where we're not all in on one revenue stream or with one specific initiative. So I think we've done a lot of that mitigating and de-risking, and position ourselves to execute now and to capture some of that, monetize some of that upside.
Yeah, and actually, just to build on that, I already said it earlier too, but I think this kind of design once, build many relationship with Worley really allows us to tailor our tactics, I should say, to different regions in the world as well. So as we see market shift, enables us to be much more flexible in terms of where we generate the revenues from.
All right. So just to final comment or question here to wrap it up, what sorts of milestones or events are you striving to achieve over the next 6 to 12 months, or what kind of milestones should investors be sort of keeping their eyes open for over the coming quarters?
Yeah, look, obviously we continue to optimize and validate our one-pot LFP at the plant level, at the product level, and that's going to be extremely important for potential off-takers and first sales in the existing plant. So I think that's primary. That's one of the really big objectives in 2024. And as I said earlier, going into 2025 and 26, we have to continue selling, of course. I think some sightlines on government funding, which will then catalyze some of the financial decisions we need to make in terms of how quickly we move forward on a 25,000 ton plant, how quickly we move forward on automating the existing Candiac facility to get it up to 1,000, 2,000 tons. That's going to play out as some of the sightlines on government funding come into place. We'll be continuously validating the operational conditions of our LFP process in the existing plant, and that will then inform the development, design, licensing, and ultimately deployment of CAM packages with Worley. We've just kicked that relationship off. So as we develop the business plan, as we map out the customer base and you know, where and how fast revenues will come, we'll be able to bring some of that obviously into the spotlight, not all of it. So I think, you know, shareholders and investors can look forward to more details on that as it comes forth. And then you know, I think things like we talked about this earlier, the work that BBA is doing on the FEL3, the feasibility study. Our expectation is to bring that to completion in Q3 and Q4 of this year. So you know, we're still very much a 2024 goal for us. With that, we'll need we can't complete the feasibility study without a site, and so we're very active looking for a site to put that 25,000 ton plant on it. Just so everyone knows, I mean, the idea is we want room to be able to expand that, because that's not the end. That plant, that project, we think could grow to be much larger volume. So we need to make sure that we have a plant and a jurisdiction that's willing to support the growth of that part of our the revenue stream of that project. So these are all things that I think we'll be able to bring more guidance to certainly over the next 6 to 12 months.
Excellent.
Miss anything there, Carlo?
I think you captured it all then.
Okay.
Well, you're busy. You've got a lot to do.
Oh, we do. Look, it's you know, the other thing is, look, it's a nascent market still. It's amazing, actually, despite how far batteries have come for electric vehicles and energy storage and you know, all of our gadgets. There's still a long way for it to go, and and obviously the supply chains are complex and fundamental to this. You know, we're well positioned to try and innovate in those supply chains and secure something that is very powerful for the company.
All right, gentlemen, thank you very much for your time. That was excellent. Really appreciate it. Very informative. Have a great day, and I'm looking forward to seeing the news flow come across the computer and having ongoing discussions. Have a great day.
Right.
Thanks.
Thank you, Martin. Appreciate it very much. Have a good weekend.